Is Baidu, ticker symbol BIDU, a good stock to buy now? Welcome to Global Value. In today's video, we're performing a fundamental analysis of Baidu using Warren Buffett's investing framework. We'll look at 6 key financial metrics before we figure out 3 different fair values to understand what Baidu is worth in today's stock market. Plus, I'll share a special bonus that could be the deciding safety factor when adding Baidu stock to your portfolio. Right now, Baidu trades for $86.86 per share. In its last day of trading as of the date I'm recording, it's up 0.75% alone. Since July of 2023, however, Baidu is down 39%. This is way behind the market and the S&P 500, which is up more than 20% at the same time. In the last decade, Baidu is down 56.4%. They've lost around 8% compounded annually over this time. When we go back to when Baidu stock was listed, however, the company has compounded at 14.3%. Even with 6 recent years of underperformance, Baidu has still beat the market over this time. Today, Baidu trades at its 52-week lows. These have been cut in half from their 52-week highs. Still though, Baidu is a big company and they have a $30 billion market cap. But they have some cash on their books, so they only have a $20 billion enterprise value. Getting started with our first metric, we want Baidu's average returns on capital to be greater than 14%. This measures the value Baidu creates, and over the long run, it's these returns on capital that are going to drive the returns in the stock. In the last 5 years, Baidu has improved these returns from under 3% in 2019 to more than 6% in 2023. Unfortunately, the average company earns around 7%, so Baidu isn't making the most of the capital in their business. In an average year, they only earned 4.5% returns, which is a far cry from the metric we wanted. This is an X on metric number 1. Now, what does the company really do? Baidu is the largest internet search engine in China, with 84% of the search engine market share as of September of 2021. The company generates the majority of core revenue from online marketing services through its search engine. Outside of search, Baidu is a technology-driven company, and its other major growth initiatives are artificial intelligence, cloud, video streaming services, voice recognition technology, and autonomous driving. In our second metric, we want growth in their sales, earnings, and free cash flows. As the company earns higher returns on capital, hopefully this trend continues. When we add growth to this, it's like the company is putting on more weight in the gym. It's generally harder to make mistakes investing into growing businesses. From the end of 2019 until today, Baidu has grown their sales by 21%. The company's earnings are up 10 times, and we'll get back to that in just a second. Their cash flows at the same time have grown by 10%. Now, why have their earnings grown so much? It's because the company lost $8 billion on its sales of investments in 2019. They actually did the same in 2022 when they lost $7 billion on sales from investments. That's losses of $17 billion in just 3 years. This has really hurt the company's returns and really hurt their profits. Still, if we take those out, Baidu has actually grown their earnings over this time, meaning all 3 of these are up. It's our first check of the day on metric number 2. Today, Baidu is owned by 5 super investors, and this is led by Michael Burry, who bought it in the most recent quarter to start 2024. Unlike the other Chinese stocks in his portfolio, this is the first time Michael Burry has owned Baidu, and it's a position worth $3.45 million for him. So far though, he's down around 20% from where he was buying in. In metric number 3, we'll look at Baidu from the view of an individual shareholder. Here we want earnings per share growth. Baidu's earnings are up over this time, even if they were kept lower in 2019 and 2022 due to those investment losses. At the same time, the company slightly diluted shareholders, issuing less than 1% new shares. While some of this goes for acquisitions and stock-based compensation, it's not out of the ordinary for tech businesses. Overall, their earnings per share are up in this time, and in their last 12 months, they brought in $7.49 per share. It's another check on metric number 3. Metric number 4 is similar but even more important. We want free cash flow per share growth. Their cash flows have grown 10% over this time, and they've only diluted shareholders by 1%. Meaning their free cash flows per share are up. It's another check on metric number 4, and things are starting to look better for Baidu. Wonderful companies can earn high returns, grow, and don't use a lot of debt. Baidu may not have the high returns, but they do have the growth coupled with little leverage. In each of the last 5 years, the company has had a net cash position. This means they have cash left over after paying off their debts. At the end of 2023, Baidu was sitting on a cash pile of $15 billion. Today, this has come down somewhat to $12.6 billion, but it's still a solid net cash position. Even better for shareholders, in the last 5 years, Baidu's brought in $13.7 billion of free cash flow. This means that not only does the company have cash coming in the door, they're also sitting on a cash pile that acts as a shock absorber in case something bad happens to the business. It's a solid check on metric number 5. Now, before we find out how much Baidu is worth, it's time to cover our bonus safety metric. Our safety metric comes straight from the father of value investing and Warren Buffett's teacher, Ben Graham. He wanted to see a current ratio greater than 1.5 times. This is a key measure of short-term liquidity for if a company's current assets are able to meet their current liabilities, aka can the company pay its bills in a hurry. A ratio of 1.5 times gives the company a short-term cushioning. Thankfully for shareholders in Baidu, their ratio has been much better than this. They ended 2023 with a 3 times current ratio, and today it sits at 2.8 times. This combined with our last metric means the company's numbers look very healthy. It's a solid check on our bonus. Now, how much is Baidu worth? Now, the big metric of them all, metric number 6, is also our first valuation. We want Baidu's average free cash flow divided by their enterprise value to give us a yield greater than 5%. That would trade in line with the historical yield from the S&P 500, and it would give a risk premium to the 10-year treasury. Today, Baidu has a $20 billion enterprise value. This is what we get when we add their net cash position to their market cap. It helps us look at Baidu more like it's a private company. In an average year over this time, Baidu's brought in $2.7 billion of cash flow. When we divide that by their enterprise value, it gives us a 13.7% average free cash flow yield. In their last 3 years, they have a 12.7% yield, and in their last 12 months, they brought in $3.5 billion of free cash flow, and they have a 17.4% current free cash flow yield. Baidu looks attractive compared to its cash flows. This means it's a check on metric number 6. Don't just run out and go buy the business though. Watch our next 2 valuations before we put them together at the end of the video to get a fair value for Baidu. Next, we'll use a DCF model to give Baidu credit for its growth. Or, as is the case for Baidu, show what's being currently priced into their stock. We'll grow their average free cash flows using historical numbers. Let's assume that they decline by 4% in each of the next 10 years. Then in the following decade, we'll assume that their cash flows decline by 10% annually. Still, we'll add the company's tangible book value to give an estimate of their net worth. If we're looking for a 15% market-beating rate of return, which is the same return Warren Buffett wants, then using these assumptions, today a discounted cash flow valuation says Baidu is worth around $114 per share. That's up 24% from their current stock price, but please keep some key points in mind. When we look at how Baidu trades compared to its past multiples and future estimates, today our third valuation comes in at $136 per share. Now, Warren Buffett likes the numbers, but it's the qualities of a company that are his true love. Let's learn what these are for Baidu through a long and a short thesis. Why don't we start with a long thesis first? Number 1, Baidu is strengthening its mobile ecosystem with search, live streaming, and mini programs. This helps to create a closed-loop experience for users to acquire information and make transactions. Number 2, Baidu is a leader in AI with autonomous driving based on numbers of miles tested and the number of driving licenses in China. This could become another growth catalyst. Number 3, sitting on a cash pile of over 100 billion Chinese yuan, Baidu has ample dry powder to invest in technology. They're particularly focused on AI as well as merger and acquisition opportunities. But things aren't all positive. Let's look at a short thesis as well. Number 1, Alibaba, Tencent, ByteDance, and Kaohsiung and other social media platforms are competing in terms of advertising budgets. This could result in slower growth in revenue for Baidu Search. Number 2, despite numerous growth initiatives, there is great uncertainty whether the new businesses can be monetized successfully on a mass scale. Failure to do so would result in heavy margin drag. Number 3, Baidu's leadership in brand and search have been weakened by more competitors entering the market. There's less reliance on search from Chinese customers, and this could be affected even more by future regulatory risks. Now let's put everything together for Baidu. In our fundamental review of the company, we learned Baidu goes 5 for 6 on the Select 6 analysis. The company has grown and they maintain a very strong net cash position. They also bring in a ton of free cash flow both absolutely and relatively to where they trade in the market. It also looks like Baidu has a very healthy balance sheet, both short-term and long-term. The only place Baidu fell short was in its returns on capital. These have been lower than a normal business, even if they're improving more recently. For Baidu to really be a no-brainer, they need to improve their returns and become a better business. Still, the company's worth a lot of money and they trade very attractively compared to their free cash flows. That's why when we look at this investing tool to show Baidu's fair value, today it comes in around $179 per share. That's more than double their current stock price, and that's just them trading back to a market average. Baidu seems undervalued based on the numbers. That's why it's a recent buy by Michael Burry. To find more undervalued stocks, sign up for our investing tools and get exclusive bonus coverage of 99 stocks and counting.